All right, good evening all, and welcome to another amazing weekend video, the worst produced show on the internet, as I say. The worst produced Elliott Wave video on the internet. But hey, I'll try my damnedest to improve the quality a little bit this week. Every week I'll get a little bit better, eh? I'm going to start on stocks on the Dow this week, and I'll work my way through the rest of them as per usual. But this is interesting to me now. At the most recent high here, the prevailing wave count, out amongst the masses was that we had a completed contracting triangle. It's not my viewpoint, but this was what I was being shouted. This is what was being shouted at me across the airwaves. Was that this was a very large contracting triangle, and in fact we were going to blast off to new highs. That didn't happen so far yet. Anyway, the count that I had seen that many people pointed out to me was that this was an A, B, C, D, and an E wave at this low here. So it's interesting to me over the last couple of days that we have broken that previous low of the alternate triangle that some people had. So we've broken that low. So if it's a case that it's still a triangle in play, well, then you'd have an A, B, C, a D up until that high there, and then we'd be working on an E wave now. So alternately to my own viewpoint, or polar opposite to my own viewpoint, really, is that the market would rally to a new all-time high again off current lows. Now, I think that if the market continues to break down and it breaks below that 23,360 level there, that most extreme low, again, well, then that will rule out any sort of triangle, and it will call into question that bullish view completely. And it will most definitely fall in line with what I think is happening in the market. And I think we've got a 1-2 pattern along with a lower degree 1-2 pattern complete. And the fact that we had a little throw over that upper trend line and we've come off very nicely off that high, again, in my mind, adds weight to that idea. Okay. Interestingly enough, as well, on the 4-hour chart, we have a death cross already in place. So let's see if the 200 period moving average now acts as resistance to a new downtrend. We'll see, all in good time. Okay, the short-term chart is here. We've got an alternate on the short-term chart now, which I mentioned in this evening's update as well. And the fact that while I was writing, actually, the market sold down by probably another 100 points into the close, which is quite encouraging. And it takes away from the alternate count a little bit. And again, it adds weight to the current 1-2 pattern that might be in play here. We have 5 waves down in wave 1 gray. Then we had a flat correction, wave 2, and immediately we didn't even break the previous high, which was again good for the current bearish wave count. Didn't break that previous 4th wave high. We came to a high at 24,564, and again we didn't break that again this evening. So and we sold down again off that. So we're approaching that previous 4th wave support again. So on Monday we will look for. You can see here that the pattern is possibly heading down into a 3rd wave in gray here. So we may have 1-2 complete of that 3rd wave. So if we're going to get an extended 3rd wave lower, then we would look for further lower highs before we hit an acceleration point lower. So lower degree 1-2, 1-2, and then a break lower again. So for next week, we'd want to see this definitely 24,564 hold, and further breakdown into a possible third wave down. And if we get out below the previous low here, which was wave 1, if we get out below, where's the low, 23,994, then that would confirm wave 3 of 3 to the downside. Okay. That's the Dow done. Let's do gold. Why not? So we've had this a very slight rise today off the lower trend line again. So we haven't broken key support. That's again another kind of, let's say, in my mind, it's a thumbs up in terms of the current wave count. Again, like I said, if key support does give at 1236, if we break 1236, it only moves this wave 2 in red here over to the new extreme low, which would be just break below that 1236 level. And if you're looking at the daily chart, it just creates an expanded flat pattern, which would be probably better counted probably as a more complex triple compilation, maybe. 3 waves down in A, 3 waves up in B, and then 3 waves down again in C. It just creates a large 3-wave pattern here in a further larger degree wave 2. It doesn't change my longer term outlook at all, even though this correction off the recent high at 1365 has been brutal, and it's been brutal for people like us to kind of to cope with. But cope with it we shall have to do. Who said this life would be easy, eh? So anyway, at this moment in time, I'm still working with a possible 3 waves down in A, 3 waves up in B, and then an extended 5-wave pattern down in C. Let's see how this develops next week. Let's get into the short-term chart. If this little pop higher develops into a proper 5-wave pattern up, and we get a clear 3 waves down, well, then we're pointing in the right direction with the right pattern, and extremes in oversold momentum in our favor, even improving as we speak. So next week we will. I'm kind of, let's say, quietly confident that we could see it, that we will see a bullish upturn in this market. So let's keep our eyes on that one. So that's the Dow and gold done. Let's move over to crude oil, and this has been this has been this week's kick in the teeth. Introducing this week's kick in the teeth. This is the crude oil market. Now we had a nice, I had a nice run off the high, which we more or less call the high at the upper trend lines. We had, I didn't actually quite meet the upper trend line, but we had a clear, complete pattern. We had a nice early breakdown off the high, and the wave count pretty much called it off that high. And the fact that the decline off the high was best counted as a 5-wave pattern does kind of raise my eyebrow a little bit, that the pattern in wave 4 may be slightly different than what I'm actually showing here. There is a possibility that we have maybe this wave 3 high should be down here, and we should be showing an expanded flat pattern of 3 waves down, 3 waves up, and 5 waves down. Again, here goes my voice again. The second I start talking, problem is I usually do most of this talking in my head, and I don't actually talk to camera at all, or to microphone at all. So my voice just dips immediately once the record button is pressed. Anyway, back to point. So whether this wave 3 high is at that previous extreme high, and we have an expanded flat pattern, or whether it's at the recent extreme high, and we have a type of combination pattern of some sort here in wave 4. We could have a zigzag where you would call 5 waves down, and then a running flat 3-wave pattern, and then a 5-wave into wave 4, and that's what I've shown it as right now. But it's the only way I could account for the, let's say, the rocket off that recent low, and to count this as an actual full correction or a full corrective pattern. Okay, well that's kind of behind us now, and it doesn't mean a whole lot because we have this new high and this rocket higher this week. Let's get down to the short-term chart to kind of view what's going on here. I think we're pretty close to another 5-wave pattern up. There, that's the A, B, and C pattern that I've shown there. So 5 waves down in A, running flat wave B of some sort, and 5 waves down in C again. So, excuse my yawning. There's a possibility that we have this 5-wave pattern complete at this evening's highs, even, maybe. I'd say that with a little bit of trepidation in my voice, because I don't know how to account for the this intense rally that happened this week. So it's been into this evening's highs is $73 off the recent lows at $63. That's 1,000 points in 10 days. So by any way that you cut it, I think that's too far, too fast, and I think it'll be pretty much retraced quite quickly. So I would be watching for that next week. We have a trendline resistance, a pretty solid trendline resistance dead ahead. We've got I would cross my fingers and say that we have a clear enough 5-wave pattern, if not completing to the upside. And we have obvious extremes in like serious extremes in overbought momentum on the 4-hour chart here. So, and we have that topping out over the last 2 trading sessions as well. So next week, the early trade next week, I would be looking for again a further turn down, some sort of break of previous lows. So if a turn down happened and it started breaking into these these previous highs at where I've labeled wave 3 here, so that's 69 area again. If it breaks below $70 again into the 69 area, 16, even the low 69s, that would be a pretty ominous sign for crude again in the short term. Okay, so next week, looking for a high to come in crude again. So let's get down into the FX market. Here is dollar yen again. We still have this alternate count here kind of staring us in the face at the moment. A possible larger 3-wave pattern in wave 2 in gray here. So we still have 5 waves up in wave 1 complete. Possible wave 2 in. I do like the form of the rise of that wave 2 low. So I've kind of put this on the back burner for the moment. Okay, the 30-minute chart. Let's get to the hourly chart for a bit of perspective. So the rise that I've labeled wave 1 here, it's quite choppy. There's a part of me that doesn't like it. In some ways, it might be too easy. In some ways, it still counts as a 5-wave pattern, so I'm not too worried about it, and I'd still be expecting. We've got the initial decline off today's high. Once we got a break of the previous high, 110.90 today, it sold off. Now we're back to 110.60. Well, it's about 40 points into that bar low there. So we may have had the initial kind of shot across the bow for wave 2 here, which would target the previous wave 4 at 1 lower degree. So that'd be about the 110 level again. So if we get it clear, what I said in the update tonight is while this may be kind of a tenuous 5-wave pattern, clear three-wave pattern would add a lot of weight to that. So we would have 5 up and 3 down, and we would expect a run higher off that 110 level again. We've got a break of that declining trend line again. See this trend line here connecting the recent highs. So we got a nice break through that again today. The only other way to view the rise off the low would be as a possible expanded flat pattern. So if we had wave 1 instead of that recent high, if we had it up here, which I don't like again, we would count 3 waves down, some sort of a 3-wave pattern here, and then 5 waves down into support again. So for next week, we would look for confirmation again of excuse the noises that are coming out of my mouth. Try to think of these things on the fly here. Even though I've just done 3 hours of thinking and writing for tonight's update, I still have to rehash it all and speak it. So excuse me. Either way you look at it, I would expect early next week to start to sell off down into the 110 area. If it's the current count, you would expect we've got 5 waves complete, that we get 3 waves down into 110. If it's the alternate count, that we have, let's actually put that alternate count in here while we're talking. I don't know if you hate this or not, me adjusting charts while I'm supposed to be doing a review video, but hey, that's just me. My wife puts up with it, so you'll have to do. So if this wave 1 in green is at that recent 110.90 high, and then we've got 3 waves down, 3 waves up. If we see a further break, say if we get back below 110 again, if we get back into maybe 19, yeah, if we get back below 110, we probably prefer that alternate count, which would be an expanded flat pattern in wave 2. Again, it's still a second wave, and we'll still be looking for a rally higher to continue. But suffice to say, so far so good in dollar yen. We're still looking for the longer term. We're still looking up. Okay, let's get to the transatlantics. Okay, so pound dollar is still looking good. We've got a couple of refusals here at the. You can see here where the moving averages have kind of swapped roles now, and they're starting to act as resistance rather than support, as they had been all the way up. We got the first hit off 200 period moving average there. That was back in the 14th, and we've got a couple of failures now so far. We had actually this week we had a failure at the 50, so the price is back at the 50 again. So in terms of momentum, we could be looking at that might be an initial hint towards the alternate count that I'm going to view right here. In the larger picture, we've still got 5 waves down, we've still got a possible 3 waves up, and we're still moving down into a possible 3rd wave down. Excuse me. Okay, so this is the hourly chart. So that alternate count would be either a larger wave 2 in green here, or well, actually today I switched anyway. So the first alternate was a larger wave 2 in brown. So forgive my confusion there. So the first alternate was pretty much triggered by the rise today. That's a pretty impulsive rise. So we might see next week, we could see a little interim sell-off maybe on Monday. And we could trace out 3, we could trace out 5 wave patterns. It's hard to see, it's hard to know that right now. But this looks like a series of maybe 1, 2, and maybe we might be seeing an extended 3rd wave up. We'd expect either a B wave correction or a 4th wave correction in early Monday, or Monday trade anyway, to continue into maybe late Tuesday or Wednesday. to complete that ABC as an expanded flat wave 2. So we'll have 1, 2, and 1, 2, or 1, 2 complete by possibly Wednesday. And I reckon if we get a solid break of that 133, if we get back up into the higher 133s, we'll be looking at the alternate count here, which would view the wave 2 green here, which let's get out to the 4-hour chart, which would view wave 2 green as a larger expanded flat pattern. So let's keep an eye out for that early next week. Firstly, I would be expecting this rise to continue with maybe an interim break in a minor fourth wave there. Minimum target probably about 133.14, but we should see a break of that. We should see probably 133.50 to break that. Okay, so that's pound dollar. Now euro dollar. This is the 4-hour in euro dollar, and again, we've still got we've still got a pretty bearish setup in euro dollar, even though we've sold off massively off the highs. We're down now into the teens, which nobody expected. We've got a couple of failures again at the 200. We've got actually 3 points at the 200 now again. So we should see another sell-off that 200 early next week. I don't want to see any major break of that. So we're still looking for a larger 5-wave pattern to complete in euro dollar. So 1 down, 2 up here in green, extended wave 3, possible wave 4 complete, and looking down into wave 5. There's another way to view this as this wave 4 here as a contracting triangle, but I don't think we need to talk about that just yet. We'll see. For now, I'm still sticking with the idea that wave 5 down is still underway. So this is the short-term pattern. That's the fourth wave there. We've got a nice possible. There's a couple of ways to view this actually, and I mentioned that on this evening's update. There's a few different ways to view the current kind of funk that euro dollar is in right now. We do have 5 waves down off that high, so that does suggest that we've turned back down into a possible third wave. So that's why I label that wave 1. This evening, or today's rally kind of raised a few questions in my mind about that, because it would also count as 5 waves up. And if that were the case, let's get a little scribble going on here. If my computer ever starts. Okay. So another way to view this possible pattern going on here would be wave A up, and these 3 moves here would be part of a running flat, which would be 3 waves down, 3 waves up, and 5 waves down in a C wave to a higher low. So that would be a running flat. It didn't break the extreme low. It stopped short of the extreme low, so it's a running flat. So you're talking about wave A up, wave B, and then you might see a higher wave C, which would complete wave 2. So it'll still be 3 waves, and it would still complete wave 2, and you'd still be expecting a move down into wave 3. That is my main point of focus for early next week. Now, we haven't broken that 117.20. That was the recent high, which we've called wave 2. If this more complex wave 2 plays out, then a break at 117.20 would be the signal that that's underway, and we'd probably look for high up around the 117.50s, or might even pop into the 117.80s or something like that to complete. But a break of 117.20 anyway would trigger that alternate wave 2 in a strange kind of complex correction. Okay, for early next week anyway. If we're going to see a turn down, if the current pattern holds, then we should see a turn down of this evening's highs. Where were we? We reached a high of 116.89, 116.90. We should see that kind of level hold. Definitely 117.20 shouldn't be broken, and we should start to see impulsive moves off that high again. So next week, we want to see this kind of these two counts clear up. So we want to see wave 2 complete. Let's say we want to rule out the alternate wave 2, and we want to start confirming a move down into wave 3, which would be wave 3 brown, which would be wave 3 of wave 5 in green. Okay, so that clears up 6 markets, I think. That's me done enough talking. Like I said, I'm going to be off on holidays next week. I do intend to do a couple of, depending on the internet setup, we're going camping around down in Devon and Cornwall. So depending on the internet setup, I do intend to do a couple of chart updates if something interesting happens in the market. So expect that probably maybe Tuesday and Thursday or Wednesday and Friday, something like that. But this will be the last you'll hear from me for a couple of weeks. You probably you need a break from me anyway. So God knows I need a break from me. So I'm wishing you all a great weekend. And until we talk again, Godspeed. Have a great one, everyone. Bye bye. God bless.